Let's get more reaction to this rate hike from Dennis Lockhart, former Atlanta Fed president. He held the post during the height of the financial crisis. Dennis, great to have you with us.
Thank you.
Pain was the message that Powell delivered. How much pain, and when do you think we'll see unemployment go above 4%? I mean, when it comes to the pain that we felt on Main Street and on Wall Street, is that around the corner?
I think it's likely to start later this year if the path of policy that they projected it turns out to be executed, which is another 100 to 125 basis points by year end. I think companies are going to begin to retrench a little bit in anticipation of a much slower environment, and going into 2023, you could very well see the unemployment rate rise.
You know, when you paint the picture like that, Dennis, in terms of pain, the pain of higher unemployment by the end of the year, companies retrenching, a world in which the two-year note is yielding north of 4% at this point, it doesn't sound like a soft landing scenario. It sounds like recession is almost a foregone conclusion. Where do you stand on that, knowing now better what the Fed's policy trajectory is?
Well, I don't think it's yet a foregone conclusion, but as Chairman Powell said during the press conference, the higher for longer posture or stance of policy may very well mean that the chances, at least, of a mild recession, that's as far as he wanted to go, I think, increase. So I think he's very sober in his recognition that it may require a recession of some kind in order to finally vanquish, as Steve Leisman said, vanquish inflation.
Mr. Lockhart, it's Karen Feinerman. Thanks for being here. Let me ask you, do you think the Fed, given all the data that they have, do you think they're doing the right thing?
Well, it's always a compared to what question.
Compared to the wrong thing.
Yeah, but I mean, it's compared to an alternative scenario of some kind. I think they're doing the right thing because I think the fundamental point that Jay Powell has made is that over the long term, if a central bank does not get inflation under control, everyone suffers. And then you have to come back and try to fix the problem with harsher measures at a later date, and then the suffering is deeper. So they're presented with this inflation problem. They're going to deal with it. And I think the policy path, the policy stance is what is required. Yes, I'm very supportive.
Is there any fear, though, on your part, Dennis, that the Fed, that we just have not seen the impact of these rate hikes flow through to the economy? We haven't seen the effects of balance sheet flow through to the economy yet either. And when it does hit, it's going to hit really hard.
I think that's possible because there's always lags. And one metaphor for this is the risk of oversteering. And you've heard this before, but it's the ocean liner and you're the captain and you're turning the wheel and nothing is happening. And so his tendency is to oversteer. In this case, the Fed doing that with limited tools against a complex picture of inflation.
Mr. Lockhart, inflation, what part of this troubles you the most, and just timeline on where are we turning the corner?
I have been focusing on the shorter term measures of inflation month over month, and I've been focusing more on core and various indications of core inflation, which gets to the underlying inflation that the Fed really cares about. And at least the CPI last month, the underlying, that is core inflation month over month, doubled effectively. So it showed, as Powell, I think, portrayed, we're not seeing real convincing evidence that inflation is coming under control.
Dennis, we got to leave it there. It's always great to get your take and analysis on things. Dennis Lockhart, we appreciate it. All right. So now what, Dan? I mean, if by the end of the year we're starting to see unemployment tick higher.
Did you watch last night's show? Because you should know.
I mean,
to quote our friend Guy, he's still our friend, right?
He's still in Sicily, too.
Okay, fine. Careful what you wish for, right? And when you think about this, right? So if they want pain, then they may have Main Street pain. They might put us in a recession. They may not know how to get us out of that recession because we have some very unusual dynamics that have kind of added to this. We've just doubled the size of the Fed's balance sheet over the last few years because of a black swan event. It wasn't because of the normal course of recessions or anything like that. So again, I think that probably the logical higher bound of unemployment is not where we were pre-pandemic at 3.5%. You know what I mean? It probably is somewhere at 4%. But again, I mean, the recession that is coming is not likely to be one that they're going to be able to turn on a dime and go back to, QT to QE to raise to lower interest rates. I just don't know how to do that.
So I have a question for Steve. In terms of your forecast for February, the S&P forecast 3,300.
Did I say February?
February 2020, yeah.
You gave us an exact date, Steve, and we're going to come back on
No. He meant the Feb 2020 highs, the pre-pandemic.
Yes.
Sorry. I thought you meant by February, which
I was actually going to ask for a Bear aspirin because I didn't see that coming. Go ahead.
But if we go to those levels,
right,
which is below what many people are you short do you short the markets now? Like, how do you trade through that?
So
is your belief.
For me,
ultimately.
the only thing that's a catalyst for the market to bounce before year end or thereabouts is the midterm elections. So I don't think collectively on
the
this
next
desk.
Fed meeting is a week before the midterm elections.
Yeah, which it could be politicized, but I don't think there's anything that I can think of because earnings are going to start to take a hit. Margins are going to start to contract. So there's zero bullishness in me other than the elections in November, and that's the only thing I could see that rallies the market.
Or maybe a CPI print that cools off.
No, it doesn't matter.
Well, because we know now. We know that the next month could be another jump like we saw July, August, right?
Yeah,
so we've learned our lesson.
Right, but it could also come in cooler.
Right.
Which so you're saying what could maybe?
No, I think you're right. The market could jump off of that, but as soon as Powell and the Fed governors come out and say it means nothing, then the market sells.
But the
right
message to me today was entirely hawkish is they've got to go past it. He said the economy doesn't work if there's not price stability. He talked about their dual mandate. He only leaned on one side of the mandate today. He didn't really talk about employment. He talked all about price stability. They're going to go a lot farther than they feel like they need to.